In this video, I'm going to explain to you guys what a stock is and what the price of a stock reflects. A stock, which is also referred to as an equity or a security, represents a fraction of ownership in a corporation. The value of the stock is determined by the price that you see on the chart. Now let's say you see the price of Ford on the chart at $7. That means one share of Ford is worth $7. Essentially, when you're buying more stocks, you're taking more ownership in the company. So if you were to buy one share at $7 versus 10 shares at $7, you would be owning more of the company if you were to own 10 shares than if you were to own one share. There are many ways that a company can make money off of a stock's price. The first thing that you have to understand before you understand how a company makes money with the stock's price is that when a company is made, an investor invests into the company, and that investor is registered with the SEC. Since he is registered with the SEC, now that person or entity will have the ability to list your company on the stock exchanges, so it could be available for you to trade on Robinhood. Robinhood also has to go through the same process and get approved by the SEC before they can even list any stocks or offer them to you to trade. So once the company gets the investment, the entity that invested in the company then listed on the public stock market in order to raise money for the company to make back their investment. These aren't the right numbers, but let's just say you wanted to invest in Facebook before it IPO'd and you wanted to buy 75% of it for $100 million. In order to make back that $100 million investment, if we IPO'd Facebook at, let's say in this instance, $10, we would need to sell 10 million shares of Facebook to make back our whole entire $100 million investment. Companies can issue new shares even after they make back their investment to raise even more money for the company, and that's the main way that these companies make money. If a company wanted to issue new shares, all they would have to do is sign a piece of paper issuing 1 million new shares. On this piece of paper, it gives an exact date as to when the company has to sell these shares by. Let's say our stock is at $1 and we only issued 1 million shares. If we were to sell all of our shares at $1, we'd only make $1 million. But if our stock was at $10 and we sold 1 million shares, he would then make $10 million. So a company will do everything they can legally, release news, do press releases, talk about research that they're doing in order to hype up their company so that people think that it's a good investment and that it will go up over time. For a company, it is very lucrative for their stock price to go up and be as high as possible. So when they sell their shares, they can make even more money. Just a simple transaction of you buying and selling a share, the company that is issuing the shares is actually making money just on commission on you buying the share every single time you trade. Because of all of this, stock prices often get very overinflated so that companies can sell their shares at higher prices and make a nice profit. There's a lot of systems that they use that are completely legal that push these stock prices up and make them go higher than they usually should. When the stock prices are high and the insiders are selling their shares to make a profit for the company, this is where people can actually come in and make profit on the stock going down or up. There's lots of different strategies that people have come up with and use that are very effective in actually buying these stocks and also when the stocks go down. It's just very weird movements that occur around these, and they're very systematic. It's in these moves that we are able to make a big profit on stocks because the markets usually price these stocks perfectly. It's only on these inconsistencies that we're actually able to profit. There's also many other different ways that companies make money from their stocks, but those are the very, very general basic ones that most big companies use. I'll be going over a lot of other stuff in my future videos.